So we have to take another look at CCIV as it is up almost 20% again since we last covered the stock about a week ago, which also is a 61% gain from the first pullbacks. Those pullbacks happened after spiking about 435% in January, but what is currently happening could prove the potential strong recovery we talked about last time. So what we are going to do today is give you an updated insight into what is happening to CCIV's stock and break down exactly whether it is still a buy at the end. And as the analysis in the video is absolutely crucial to consider before buying the stock, make sure to stay tuned. But before we jump right in, just hit that subscribe button down below. And as we'll keep you updated on breaking news and awesome trading opportunities every single day, subscribing would not only help us but also you. So there is really no excuse for not smashing the subscribe button. It's free, and you can always unsubscribe if you feel so. Alright, so in the case of CCIV, we're looking at a company whose reason for actually being interesting to investors is that it brought Lucid Motors public through a SPAC. And while the surrounding hype can on the one hand be explained by Lucid being another electric vehicle company, this also means that it has to compete in the very competitive EV space. So what made the stock go up so much in the first place, however, and this is really important for the prediction at the end, is the hope of investors that a company like Lucid can actually compete against giants like Tesla. And reading through some articles online, you'll quickly find people pointing out that would never be possible, but this is where I would disagree because of one simple reason: Tesla and Lucid are not the same. While Lucid, for example, is starting on the high end with its Lucid Air Dream Edition, which will have a price of $169,000, Tesla focuses more on the broader cheaper car sector. This then leads to fewer conflicts between the companies and of course a higher chance of Lucid Motors succeeding. But, and this is also crucial to consider for our prediction at the end, Tesla currently is way ahead of Lucid. In fact, Lucid hasn't even delivered a car yet. The company, however, expects to have vehicles on the road before 2022 begins. Assembly of the company's first production model, the Lucid Air, will occur at the newly built factory in Arizona in the second half of 2021 to build the recently reported 9,000 reservations for the Lucid Air. Bear in mind, however, that these are only expectations of the company. But if the company actually holds true to these promises and is able to deliver its first vehicles in the mentioned deadline, a massive spike in the stock's price is almost guaranteed. Taking a look at the future, over the next 5 years, Lucid also foresees massive growth in production, including the introduction of an SUV in 2023, while expecting to sell about 48,000 vehicles in 2023. So considering management's forecasts for the next 5 years, it's no wonder that investors are excited about Lucid Motors. But as mentioned before, it is very important to consider that competition continues to rapidly grow with upstart EV manufacturers like Lucid as well as legacy automakers that are focusing more and more on EV-heavy product lineups. In addition, the company will surely face some challenges that could result in the company failing to meet its growth projections. Additionally, the fact that it was the management that has supplied the projected financial figures is critical to note. There are a ton of companies that have provided ambitious earnings forecasts to drive investor enthusiasm, yet who have failed to achieve their own guidance. So to sum it all up, Lucid Motors definitely has huge potential if it can prove itself against giants like Tesla. This, however, isn't as unlikely as you would think due to the different customer targets of the companies. Buying right now, however, is very risky, which is why we recommend waiting for the first actual cars to be delivered and the following either negative or positive news before buying or adding more stocks. If retail traders, however, continue to hype the stock up as well, some short-term growth is also very likely. Alright, with that being it for today's video, thank you very much for watching. If you like this video and want to support our mission of providing free financial information to everyone here on YouTube, please ensure you're subscribed and definitely consider leaving a like. As mentioned before, it really means the world to us. Thanks a lot and see you next time.